Hi and welcome to this week's Property Insider video. Today I have a chat with Dr. Andrew Wilson about Australia's biggest bank doing a 180-degree about face and now suggesting we're going to have very strong property markets moving forward in 2021 and 2022. We're also going to talk about how Melbourne's coping with the lockdown and what's happening to buyers and sellers in the current property market. If you'd like to keep up to date with what's happening in the property markets, why not subscribe to our YouTube channel and click the little bell icon so you're informed when a new show comes out each week. House prices continued rising in Australia's five largest capital cities throughout February. Already in the first half of February, prices have risen as much as they have in January. And this week, Australia's biggest bank, the CBA, upgraded its housing market forecast, joining the long line of economists that have done a 180-degree about face. They said the surging momentum in our property markets and leading indicators pointed to strong price rises, and they forecast dwelling prices to rise 8% in 2021 this year and 6% next year. And they believe houses are going to outperform apartments. So to get a better understanding of what's really happening in our property markets, let's have a chat with Andrew Wilson, Chief Economist of My Housing Market. Hi, Andrew.
Hi, Michael. Yes, another week is upon us, and of course, things have changed.
Well, they have, and they've changed in Melbourne as well, and we'll get on to that. But again, another group of economists have changed their forecast. I just mentioned that briefly in the introduction. They're now suggesting, the CBA economists, that our housing markets are going to boom. Only 12 months ago, many of these bank economists said our property markets are going to crash. Many commentators suggested falls of 20, 30%. So looking back today, they're saying the reason for our property markets holding up so well was due to the government stimulus package. What are your thoughts on that? Is that true?
Well, there's a lot of people out there on JobKeeper who are buying houses. So I'm just wondering whether the Commonwealth Bank can give us some insights into the loans they're giving to those people that are on welfare. Because if that's the reason why things have turned around, and I don't think it is really, it's quite remarkable. I think that any excuse will do when you've been proven to be as wrong as most of all of the bank economists and certainly most of the commentators in terms of house price predictions for last year. It's all now groupthink. They're all hugging each other and saying, oh, yeah, it was the government stimulus packages that did it. But of course, it doesn't hold water when you look at, the actual nature of home lending and also prices growth. I think that for higher numbers of people on welfare to be driving the housing market, it really is almost nonsensical. And if you look at the next level, and it could be, well, okay, all the stimulus money helped increase economic activity when it was filtered through the economy, but most of that spending did come in areas which are not what you would call high employment growth areas or high income areas. So I guess even using that type of lever to suggest increased housing market activity, I think also doesn't hold a lot of water. I guess any excuse in a storm, Michael, and that's what's happening in the moment. It's the government stimulus package that's responsible for what's going to be a very strong year in house price growth this year, even though the stimulus package is ending in a couple of weeks. And also the latest data from the tax office shows that JobKeeper numbers have plunged downwards over the December quarter.
As we keep saying, we're not about to fall off a fiscal cliff. Now, the other big news this week was the Victorian lockdown, yes, which turned the booming Melbourne market on its head. I mean, it's done very well. It started the year with a full head of steam.
Yes.
And boy, did it surprise over the weekend with the auction clearance rates, Andrew.
I was surprised with the number of auctions that were successful or actually conducted. Yes, we had 100 withdrawals, which was probably lower than I would have expected. It just sort of beggars the question, how did these auctions actually occur? And we're talking Saturday listed auctions here, and there were, over 600 listed. So, and to have a near 80% clearance rate and to have only those 100 withdrawals, suggests that a lot of those auctions were either sold prior to Saturday, or they were sold as an online auction, or there was another mechanism that the industry has created to, I guess, adapt to any particular lockdown.
Well, on the ground, we found a lot of deals were done late Friday afternoon, Friday evening, and many actually did become Zoom online auctions. And of course, others have been postponed for a weekend. But it wasn't just the Melbourne property market. Sydney,
Yes.
Canberra, Adelaide, even Brisbane at
Yes.
72% clearance rate.
It was a big weekend, even for Melbourne, as we've just discussed, but an extraordinary result in Sydney. That's the second highest clearance rate on record, Michael, for any weekend for Sydney. And that's back-to-back clearance rates at 89%. That's extraordinary activity levels in Sydney. And listing numbers were also higher. So it wasn't a question of low listing numbers. And all the other capital city markets that have auction markets produced very, very strong results. Back-to-back 90% clearance rates in Adelaide, and another significantly above 80% result in Canberra. And as you said, Brisbane has over the last 3 or 4 months produced some remarkable results for that market. We're used to having 40s and 50s in terms of clearance rates, and we get pretty excited when we get over 50% normally in Brisbane, Michael, but they've been having 60 and now 70% clearance rates. The one thing is that numbers are quite low compared to the same time last year in Brisbane, auction numbers, which is unlike the other capitals where auction numbers are either higher, significantly higher, or holding. But Brisbane's just a little lower this time of the year. But certainly it is a very strong across the board housing markets at the moment, and plenty of momentum and likely to continue. But if the Melbourne lockdown continues, we will see once again the market on hold as we saw last year.
Well, we can now see your chart showing that newly listed established homes have really picked up.
Yes.
The sellers are back in the market,
Yes.
Andrew.
Yes, Michael. I can just give you a quick update regarding the Melbourne market and newly advertised or new listings over the past week. And we're seeing again another surge in all of the capital city markets in new listings. So sellers are coming into the market to take advantage of strong conditions. But we did see a fall in the number of Melbourne new listings. It was just down by 0.9% over the week. So obviously that would have reflected late week, obviously postponement of decisions to put properties on the market. But Melbourne was the only one that went backwards last week in terms of new listings, and down by just 0.9%. But as we suggested, if the lockdown continues, those new listing numbers will continue to fall in Melbourne as we saw last year.
Now, if we compare it to this time last year at 7.2% higher, but it's hard to remember. In early February last year, this time last year, we were so excited how the market was going to do well and buyers and sellers were already well into the market. So it's a good effort where we are now.
Oh, well, it's a stronger market, Michael. But of course, we've got a lot of catch-up energy. We've taken advantage of the pause last year. So we've still got pent-up demand from buyers and sellers that is fertilising the market at the moment and pushing it to higher levels. But in Sydney, Melbourne and Perth, we're still behind where we were 3 years ago. Well, back to where we were 3 years ago now in Sydney and Melbourne, but still behind in Perth. So there's still some catching up to do, not just in terms of the constraints from coronavirus, but also the constraints that the market's faced over the last 3 years.
Apart from new properties coming on the market to sell, buyers active as well. So this chart's showing the home sales activity. And I guess the combination of more buyers out there buying up means that overall there's actually fewer properties. There's less choice of good, well-located A-grade homes and investment-grade properties.
Yeah, well, that's right, Michael. High turnover. This is churn. So we don't learn much from the number of properties overall on the market. It's about new listings and new sales being reported. That tells us what the market energy is in more of a real-time, realistic model. But it is those clearance rates are telling us that buyers are snapping up everything that comes into the market at the moment, Michael. And we know that except for Brisbane, auction numbers are higher than where they were a year ago as well. So that's another indication of the strength of the market at the moment. And it will continue through, notwithstanding any more shutdowns. And we've certainly got our fingers crossed about that it will continue strongly through the rest of the year, in my opinion, because we still have a lot of forces to drive prices upwards that we missed out on over the last 3 years in Melbourne and Sydney particularly, and of course
Well, usually over the first couple of months of the year, there are a couple of long weekends and Easter to hold things up, but Easter's a little bit later this year.
Yes.
So I can see a lot of activity happening in our property markets moving forward.
Yes, Michael, this lockdown's probably come at the wrong time because Melbourne's early autumn market is typically very, very strong. We have the Labor Day long weekend coming up in 3 weekends' time. And usually the weekend before that is the first Super Saturday of the year when we do get an absolute bucket load of properties going under the hammer. Now, we would have had very strong numbers this year, part of that catch-up energy, but the lockdowns obviously put the kibosh on that. So it's a bit of a shame in terms of buyer and seller activity over the first part of what is usually a very strong part of the Melbourne market.
Well, we'll be back each week to have a look at what's happening in the market, catch up with the latest news, and look at your interesting insights. Thanks for your time, Andrew.
Thanks, Michael.